Hey, how's it going, guys? It is Olivier, and today I'll share with you my full stock portfolio update for the month of June 2024. As always, I'll start by sharing with you what are the different individual stocks that I have in my portfolio, followed by the different sectoral distribution of them. And at the end of the video, you'll find what are the different transactions that I've made over the past month of May. But you need to know that at the moment, I am prioritizing to invest in high-yielding savings accounts because I have different fees related to my real estate, for example, the heat pump and taxes that are coming in June. It is why in my next monthly update, you will also find what are the different ETFs or exchange trade funds that I hold in my portfolio. But now let's jump right into my stock portfolio by taking a look first at what are the different technology companies that I have in it. And as you can see at the moment, I hold 4 of the big GAFAM, which are Apple, Meta, Google, and Amazon. And add to this, I also hold Tesla and a small competitor of YouTube, which is called Rumble. In terms of the performance of these stocks compared to the average price that I've paid for them, you can see that my 2 best performers by far have been Meta and Google with over 100% of total return. However, you can find that my small stake in Rumble hasn't been doing that great with some overall return of less 70%. Then when we are jumping into the energy sector with my 2 oil companies, which are Enbridge and Pembina, you can find that the unrealized profit that I've made from these 2 companies have been pretty good for Pembina with close to 85% of unrealized gain. But on the other hand, for Enbridge, it has been a little bit lower since I have been adding back a lot of different shares to my portfolio lately. But keep in mind that all of this unrealized profit doesn't include all the massive dividend income that I've generated from these 2 companies that are offering over 6% of dividend yield to their shareholders, which is the same phenomenon with the different financial companies that I have in my portfolio, which are 4 of the big Canadian banks as well as the largest insurance company in Canada, Manulife. Unfortunately, you can see that the largest stake that I have in the big Canadian banks, which is in the TD Bank, representing close to 12% of my stock portfolio, hasn't been doing that great with some return of less than 10%. But on the other hand, my second largest financial stake, which is in the Manulife company, has been doing tremendously well with close to 76% of total unrealized profit. In terms of the telecommunication companies that I have in my portfolio, so for both Bell and TELUS, you can see that they haven't been able to perform well with some return of less 17 and less 14% for both of these companies. The only positive point that I have to keep holding them is the fact that they are still able to give some great massive quarterly dividends to their shareholders. But on the other hand, for the consumption company that I have in my portfolio, Couche-Tard, you can see that it's still able to perform quite well with some return of over 50%. And so you can see that this total unrealized profit has been reducing compared to my previous video because I've been adding more shares of it to my portfolio. And now for my stake in the Savaria company in the material sector, you can see that it has been able to perform quite fairly okay with some return of about 32% without including all the monthly dividend income that they are giving. The same principle is applying to my real estate investment trust company, Raucan, in which I've been investing quite a lot of my liquidity, which has also been able to return close to 40% of total unrealized profit. And finally, for my super small stake in the 5N Plus company, you can see that after years of being in the down, you can see that the total return of it has been of about 27% at the moment. And so you can see that right now, my stock portfolio has some unrealized profit of close to 40% or about $33,000. And so this means that only for my stock portfolio, which is excluding all the different funds that I have, it is currently worth about $120,000 at the moment. Now, the 2 main objectives that I have for the long term with my portfolio will be to be able to rebalance my portfolio with more ETFs, and where I also want to reduce my overall position in the TD Bank, which is representing too much of my total assets at the moment. Now, when we jump to the sectoral distribution, we can find that the technology sector is by far the most represented sector in my portfolio with close to 43% of my total assets. Then we can find the financial sector that is at the second position with close to 25% of them. After we find the energy sector, followed by the real estate sector, the consumption sector, the communication sector, and the materials sector. Now, in terms of the transactions that I've made over the past month of May, you can find that I've been adding a few different shares to my overall portfolio, notably where I've been adding back more Enbridge share, more Couche-Tard share, more Tesla share, and more Bell shares. These are mostly great dividend income companies, but with Tesla, I've also been adding them for the long term since I believe in the long-term growth of this company. But now, on your side, if you want to find other options of companies that are currently undervalued on this market, well, check out the video that's gonna be right over here, and I will see you soon. Peace!